Hello, everyone out there in podcast land. Welcome back to Adventure Capital, where we not only discuss the entrepreneurial journeys and adventures with founders who have raised capital on WeFunder, but also the different resource providers and mentors helping founders along the way. Huzzah! Today we have Andrew Gazdecki of MicroACQUIRE, the world's #1 startup acquisition marketplace. MicroACQUIRED! One of our favorite phrases now, say that 3 times fast. WeFunder gang gang, take it away.
Well, welcome to the podcast, guys. Jonny Price here at WeFunder with illustrious co-host Katie Powers.
Hello, hello.
And today we're joined by the CEO and founder of MicroACQUIRE, Mr. Andrew Gazdecki. Andrew, hello.
Johnny, what's up? Thanks for having me, man. And I hope you had a good recent birthday.
Thank you. We won't get into how old I turned. I actually went on the MicroACQUIRE podcast earlier this week and revealed towards the end of the episode that it was my 39th birthday. So yeah, thanks for.
I would have mandatory rescheduled if I knew it was your birthday. I would have never made.
I couldn't think of a better way. Couldn't think of a better way to spend my birthday, man. Wow.
It was a good chat.
Well, enough about me and the passing of time. Maybe you could start, Andrew, by telling us about what you guys are up to building with MicroACQUIRE.
Yeah. So just quick intro on myself. My name is Andrew Gazdecki, and basically been an entrepreneur my whole life. Did all the cliche stuff like selling stuff on eBay. I had a World of Warcraft affiliate gold selling website at one point. It's kind of embarrassing to admit. And built, a couple of businesses after that. So I've been through, 2 acquisitions personally, and MicroACQUIRE is a marketplace to buy and sell startups. So we focus primarily on profitable software companies ranging from SaaS, e-commerce, newsletters, communities, even some niche companies in the crypto space or Web3. And really our mission is just to really help make acquisitions easier for startups. So we're building basically a platform where you can list your startup entirely for free and then meet buyers pretty much same day.
Awesome. How did you come to found MicroACQUIRE? Was this born out of your own problem that you experienced?
Yeah. I always say as entrepreneurs, we're not trained in terms of how to sell your business. Mm-hmm. There's a saying, your startups are bought, not sold. I'm putting quotes up. And that could not be further from the truth. You need to sell your company, meaning you need to meet buyers. You need to speak to buyers. You need to understand how to put your company in a position to be acquired. You need to understand, what does that process look like? What are the legal steps? What is due diligence? So when I sold my first company, Business Apps, I had a bunch of founder friends reach out to me and they're like, how did you sell your company? What happened? Like, almost like, I don't know. I found like, the meaning of life, or the 8th mystery of the world. Like, just, everyone was like, wow, tell us what happened. And I just thought that was intriguing. And so after that, I started a second company called Altcoin, which I raised capital on WeFunder for. And then with that business, learned a few things that I think were really important for MicroACQUIRE in terms of really just, loving the customer. So Altcoin was a crypto company, and what we were trying to do was speed up times on the Ethereum blockchain using a layer 2 sidechain solution. So very, very technical project, very capital intensive in terms of regulatory compliance. Our first use case was going to be like a decentralized Coinbase. We ended up selling the assets of that business to B&K to the future. But what I learned was, just the importance of like having a unique insight when you start a company is critical. And so I didn't have one. I had one at Business Apps because prior to that, I had a job board that connected businesses with mobile developers. And I started seeing this pattern over and over and over of a certain type of app to create. And so I said, whoa, what if I just made a template and reskinned it 1,000 times for the same sort of business looking for this? So I had like a unique insight. I didn't have one of those for Allcoin. And I didn't have a good grip on the customer. And so when I was thinking of my next startup, I started with the customer. I thought, who's a customer that I want to serve more than anyone else? And I was immediately drawn to startups and entrepreneurs. And then I thought of, business models that I think I could excel at. And I'm not a technical founder. So, project like Allcoin, very technical, that should probably have been led by, someone deep in Ethereum or something like that. Business apps, I had, both my parents are small business owners, so I had good insights into just, small businesses and how hard they are to run, and was able to really understand and empathize with their needs. So wrote down the customer, and then the business model, came towards a marketplace because, it's really less about the technology and it's more about, the supply and the demand that you're able to bring into the marketplace. Mm-hmm. You're essentially connecting two people, and then you build tooling that helps those two people facilitate whatever sort of transaction they're looking to do, whether that's, like eBay, Craigslist is a marketplace.
WeFunder.
Yeah, stuff like that. But you guys got a lot of tech. But yeah, I basically just kind of tried to design a company that leveraged my strengths, but also things that made me happy, stuff that brought, positive energy towards, because when you build a startup, you can build whatever you want. You can serve any customer.
I love that.
You can solve any problem. Like, I think, so through my career, with this third startup, going through a few, little ones and big ones, wins, losses, I really try to optimize around, just the understanding of, if you can find a way to build a startup that aligns with your strengths and your passion, that's really where you win, because you gotta love your customer if you're going to be running a company for, a decade or something like that. So I made that really clear. And then, I felt I had, a lot of unique insights from just personal experience, selling to businesses. And then I went and looked around the market, like where to lower market, SaaS. I started specifically with SaaS, and I just saw a market that had no innovation in like a decade. The typical routes to selling a smaller business, let's call it under 10 million, which is still a lot. 10 million is a lot of money. But you would work with a business broker, and a business broker would take, up to 10 to 15% of that transaction, and then typically price the business fairly low, just to make it like easy to sell, I assume.
So they have faster velocity of turnover on the businesses they're trying to sell. There's like strong incentive for them, right?
Yeah, I basically saw a market that favored buyers more than entrepreneurs and startups. And so I said, what if we just did everything differently? So we favor founders and entrepreneurs and startups at MicroACQUIRE. We don't charge any commissions on deals that happen on MicroACQUIRE. That'll obviously change in the future as we build tooling for you to transact on platform. But yeah, kind of a long-winded rant of your question, but
it's
I
honestly,
hope that was helpful.
That was really cool. I mean, it sounds so obvious, but just to play back one phrase that you said, start a company where at the intersection of, your strengths and your passion. It sounds so obvious, but it's like, it actually kind of is like, yeah, like you don't actually hear that often. obviously you'd kind of had the experience as well. You do hear like start a problem that, you know, you personally have experienced as a pain point. And so obviously you've been through the process of selling to companies, seen how painful it was. So that's probably stood you in super good stead. But yeah, that kind of strengths plus passion point, I think, is a really, really powerful one that is honestly like not made that often. One thing that you're clearly passionate about, like you do an amazing job of like building in public and just like building community and, you know, being transparent and super engaging on social. I'm a big Andrew Gazdecki disciple personally, but you're clearly super passionate about helping founders and entrepreneurs. You talk about that a lot. Why do you think that is? Where do you think that comes from?
I just, you know, maybe this is kind of like a cheesy answer, but it inspires me. I like to, you know, I if you go on like my Twitter account, you know, I post a lot of kind of like inspiring tweets, like just motivating tweets sometimes. And sometimes like it's just stuff to motivate myself. You know, there's so many. Yeah, there's so many books on marketing. There's so many books on like you can learn everything about, you know, startups, but, you know, I think the biggest holdback for a lot of entrepreneurs is just getting started, like just understanding like it's okay to fail. Like you learn from failure.
Right.
Or just, you know, taking the first step is the hardest part. Like just like realize like, you know, like once you get started, like it's not going to seem like as scary as it did when you were just thinking, like, just stop thinking about it and just start, you know, chasing after whatever dream you have. And I think, you know, when I get responses like, this is what I needed to hear or something like that, that really motivates me. But, you know, in like indirectly also, and this wasn't like a planned strategy or anything. It also blends really well in terms of MicroACQUIRE's strategy. And this is kind of a shift that I believe to be true in terms of just startups in general, is where, you know, you can look at a company and you can say, okay, you got 5 competitors, but in my view, you have 5 or 10,000 competitors. And what I mean by that is you're competing for people's attention. There's just so many startups being created, and it's becoming harder and harder to stand out. And so people are looking to hear from leaders of companies more than ever before. So and I've tested it just for fun. Like I'll say something and then I'll put it on like the MicroACQUIRE account, and then
so interesting.
And then engagement on, you know, when it comes directly from me. And I think that's a big trend that, you know, we're going to see in terms of marketing over, you know, the next couple of years, is where, you know, you're essentially removing, you know, the middleman in terms of, and that's what MicroACQUIRE did, is we removed, you know, brokers, you know, people in the middle facilitating deals so buyers and sellers could communicate directly and privately. But also just like media, where, you know, you can build a personal brand, and every announcement that you make is essentially a press release that's like seen by hundreds of thousands of people. Yeah, I think, you know, just inspiring on, we have an internal term called just MicroInspire, which is kind of, again, maybe a little bit cheesy, but yeah, I mean, we just want to, our mission is just to help entrepreneurs succeed and, you know, reach their goals. And
I have a question on that. How do you strike the right balance between, you know, kind of deliberately cultivating an audience as a marketing and growth strategy, but also remaining authentic and, you know, doing it, you know, for like the connection and the community? You know what I mean?
Yeah, like in terms of like, like if you were asking me like, okay, I want to have like a social strategy, like how would I start it? Was that kind of?
I guess there'd be like a risk, right? That like if I say, I think that the kind of personalization, the humanization of content and marketing is really important, and so therefore I'm going to talk about, you know, Jonny Price and Katie Powers and Nick Tomarello kind of more so, or kind of as well as WeFunder, but there's kind of a deliberate marketing strategy. But then I would be worried that you kind of then risk like coming off as kind of inauthentic sometimes, because it's almost like there's kind of a reason why you're doing that, right? It's a means to an end as opposed to the end in itself. Does that make sense?
Yeah. So,
but you do an awesome job, right? Where it's like, yes, it's a growth strategy, it's a marketing strategy, but it's also like it's like, so your voice is like so kind of natural, and like, I mean, you just, even in this podcast, you're like so laid back. Andrew, you could be horizontal.
I think that's the combination that we were just talking about, right? Like, we've got experience, passion, and strength, like pretty much like exuding.
So let's,
in my opinion.
Thank you for that, Katie and Johnny. I appreciate that. I'll tell you my Twitter strategy, if that's of interest. Because I've seen like Twitter courses and stuff like that people release. But like LinkedIn and like, let's just call it like social marketing. You have to enjoy it. Like, if you don't enjoy it, like, you're gonna have like mental problems and like social media addiction. And you also have to be okay with people not liking what you say. I say stuff all the time, and some people are like, I strongly disagree, and it's like, okay, I respect your opinion. Like, it's how the world works. Everyone's entitled to their opinion, but I think that's the key in terms of like, I see stuff where people are like, my goal is to get to 100,000 followers or something like that. And I'm like, why? What is the purpose of that? Is it?
Yeah, that's cool.
But, digging deeper, if you have a goal of like, I just enjoy sharing, tips on building startups and things that might motivate people to finally take that leap in entrepreneurship. I enjoy doing that. But again, the key is enjoying it. Like, if you don't enjoy it, then you're thinking really hard about what
I love that.
Like,
that's actually I think that's a brilliant answer to my question. It's like the enjoyment, and it's like, you love sharing that, trying to inspire people, kind of help founders along the journey. And so that is the end in itself. And sure, that is also then has the nice kind of side effect of like being great for MicroAcquire and growth and marketing. But yeah, that's a really cool answer.
Yeah. And another thing I'll say too is I've always, with every company I've started, I've always, tried to, tell a story that, people, it creates, fans, not customers. And that's what I think every startup should be aspiring to do, is have, people rooting for you to succeed, because it motivates you. And yeah, one of the best ways to do that is to just be authentic, share stuff that, is unique to you, that you've experienced, that could help people. But it all comes back to helping people, like if it helps like just a few people, like, you're winning, and you can do that with 1,000 followers. You don't need like 100,000 followers.
And another great way to like recruit an army of fans and like super fans, people that really believe in you. Katie's smiling here. That's what's coming. Turn them into investors in your company through
the community round. I love that. I mean, it's I agree with it, and it's true. But to round out my last point as well, in terms of like just a social strategy, is, when you think about your brand, you want to tell a story that has no ending. So you're just telling, and this kind of will bleed into build in public stuff, but you're just basically bringing people along for your journey. And some people, it's entertaining, it's helpful, it's educational, it's inspirational. So you kind of hit on like all the angles of what people are looking for, because stories, they spread like wildfire. There's stats around, you can throw up this. Okay, I got to redo that mention, but you can throw up stats, but people don't remember stats, they remember stories. So I've always just been a big storyteller, and just, again, out of enjoyment, like, I just enjoy it. And I love writing too. I love writing. Twitter makes it really easy. No more blog posts, just a little and then done. But one thing too, if you ever notice, most of my tweets will come from my phone. Like I don't plan tweets. I don't pre-write them, nothing like that. And that's where you get, I think that's where you get like really authentic, and you share stuff that, like, hey, I'm just feeling this right now, so I'm just going to tweet it out. And then you get into the buckets of, again, I'm just sharing stuff that I think is cool. I'm not worried about what people think. Obviously, like, don't say anything like offensive, but like, I don't know. I always, like, a big sort of debate is like distribution or product. I'm on kind of the distribution side. But yeah, I don't know. I hope that's kind of helpful in some way.
Yeah, definitely. The transparency is really cool. I think people love to follow the journey, and it connects them a lot more to you and the mission, and people are able to see that authenticity that you have. So yeah, I think it's really refreshing. It's really cool to see your tweets and all of your different messaging. I want to shift it just a little bit back to, you started describing some of the different problems that companies face when selling their business, mostly when we look at it from the founder perspective. But what are kind of the other main problems? Like, what's broken in that process of buying and selling companies now?
Good question. I would say it's just a really fragmented market. So the typical ways of selling a business, right now, again, we focus on the lower end. So that would be, business brokers. But for larger businesses, you would hire like an investment bank, which I've done, very expensive. And they basically shop you around to strategics, which is, a Google or an Apple or a larger company that would roll your company into theirs, for your product capabilities, your team's capabilities, whatever. And there's financial buyers like private equity groups, and they're buying your company for a totally different reason, usually for cash flow. Finding those buyers is hard, and getting access to those buyers you have to pay for. So there's problem number one. Problem number two is
just on the payment thing. So you mentioned 10 to 15% as a fee that business brokers charge earlier in the interview. That seems just like egregiously high, which I'm sure you're nodding your head violently in agreement at. But like, you also mentioned you don't charge a fee right now. Like, so how are you guys monetizing? Is it a monthly listing fee or something?
Yeah, good question. So right now we just charge buyers an annual subscription of $390 to access the platform. And then once you subscribe to that, I guess, so you can sign up for MicroACQUIRE for free and look at startups, but everything's private. So you don't know what the company is, contact information if you have additional questions. And if you subscribe to MicroACQUIRE Premium, we then vet you as a buyer to make sure you have a LinkedIn profile, you're a legitimate person. And then you have access to contact sellers. And then you send a request to sellers. And then as a founder, I can approve or deny that request by going back and forth on chat. Like, hey, do you have experience in SaaS? Hey, have you acquired a company before? If we do get to the finish line, how would you fund this purchase? And then you give them access to your data room, which usually just contains P&L, access to your metrics. Nothing's like super sensitive. You save that stuff for due diligence when you're about to close the acquisition. But I guess all of that stuff was so complicated, and really what we're trying to do at MicroACQUIRE is just streamline all this complexity of like going through due diligence or the creation of legal docs, or even things like within MicroACQUIRE, you can find an M&A advisor if you want someone to kind of guide you through the process, or you need an attorney, or you need someone to help with due diligence, or you need someone to help with valuations. So we have advisors that you can hire within MicroACQUIRE to help you with your deals. So basically we saw a fragmented market, very low NPS with the current, options to sell. And we're looking to just bring the whole market together into one place. So, regardless of if you're trying to sell for 10 million or 100 million, we want to bring transparency to the market. And what I mean by that is, when you do start to get past, let's say even, $5 million, it probably makes a lot of sense to hire an M&A advisor. But the thing with business brokers, to become a business broker, you have to take the real estate test, and then you apply to become a business broker to sell SaaS companies.
What?
So
Are you kidding me?
No.
That's
so this is why brokers have such a bad rap, because like you have to get licensed to sell homes before you. So
that is one of the most bizarre. You win the prize for the most bizarre trivia that's ever been dropped on the Adventure Capital podcast.
Yeah, so it's an antiquated law, because business brokers would typically help sell a restaurant or something like that had physical property. So there's a lease involved in that. So that made sense. But now you have business brokers, and the reason that business brokers focus on lower end deals is because the higher end investment bankers, more experienced ones, are looking to do the larger deals,
right?
Which makes sense. That totally makes sense. Mm-hmm. So that's why business brokers kind of have a bad rap, and they charge such a high fee, because maybe they'll do like a deal or 2 or 3 a year.
Yeah, so they need to cover their costs with high markup on small number of transactions.
And the one thing I want to say there too is we want to bring transparency into that. So maybe you do want to hire a business broker, maybe you do want to hire an investment banker, but like, who's the best one? Like, is there like a Yelp for this?
Have different options, maybe ratings.
So we built that. So we have reviews. We have has this person, we vet all of our advisors that you can hire within MicroACQUIRE.
That's one of the questions I wanted to ask, because one thing I've heard from a few founders down the years, right, is they are trying to sell the company. They're in these long negotiations, right? Months and months of due diligence and meetings, and it's like sucking up so much of their time. And then at the 11th hour, the deal falls through, right? And so I was kind of trying to ask like, okay, does MicroACQUIRE help with that? I imagine if there's a bunch of entrepreneurs give the same feedback on, a company that, or someone who's kind of, treating people badly in that way, then, that the ratings and review system might be one way that your platform can kind of help to tackle that particular issue.
Yeah, I guess with that one, that's tricky. So if a deal falls apart in the 11th hour,
I guess it could be on both sides.
Yeah, something, it could be totally on the startup. Like, they misreported their numbers. But, as we vet buyers, that you're working with, a credible, person that could potentially, get it to the finish line. But yeah, buyers that it's very common to have situations like that. That's a tricky problem to solve, just because, again, once you go into due diligence, that's when you just open up the closet and the skeletons come out, and you got to do a bunch of disclosures. And disclosures are basically like, have you ever been hacked?
Right.
Do you have a co-founder somewhere that we don't know about?
Got it. And some of that could then flesh out stuff that wasn't disclosed.
Yeah, but what we can do, and what we are doing in terms of helping with due diligence, is just simplifying it. So what I mean by that is really just basically making it like a step-by-step process where the buyer and the seller are on the same page. So you connect, your Google Analytics, Stripe, or Barometrics, or ProfitWell, or ChartMogul, whatever billing system, Xero. So a buyer can get a good financial view into the health of your business. And it's all just, read access, so it's nothing sensitive, but it speeds along a buyer's decision, because we make it so seamless. Instead of hey, can you send me this document? A company might not have it, or
so maybe it falls out in due diligence, but at least hopefully that is happening a lot sooner.
Yeah. So basically, qualifying buyers and making sure. And I guess the second way that we help with that is we bring a lot of buyers. There's a saying, if you have one buyer, you have no buyers. And so if that happens and someone pulls out at the 11th hour, on MicroACQUIRE, on average, you get about 30 to 40, serious buyer requests. And so out of that usually whittles down to, I don't have, stats right in front of me, but, assume, multiple offers. If your company is priced correctly, it's a quality company. And so again, that puts the founder and the startup in the right position where they have leverage, where, if someone, which is very common, this, like, a buyer and seller comes to an agreement, we're going to do a deal at $2 million. But, oh, guess what? In due diligence, I found something that really doesn't matter. My price is now 1.8 or something like that. And they just start shaving down the price. So if that happens, like MicroAcquire just brings in so many buyers, you can red flag them and say, hey, I just don't have a good feeling about this. And you can pull out of the deal and then move on to the other buyers that express interest. So again, moving towards the phrase of, if you have one buyer, you have no buyers. We really try to make a process where you have multiple buyers bidding on your business, so you can get the maximum price for your business, and then you don't have to pay a huge exorbitant fee. And
that's awesome.
I could continue to talk about all the problems that we're continuing to solve. But
yeah, I have a question on the kind of balance of startups and buyers. So like building WeFunder, we've always prioritized the founders, which it sounds like you do as well. And then the investors come because of the good startups that are listed on the platform. Is that similar to you, or was it hard to kind of change the narrative around what it's like to acquire companies? It seems like a very antiquated, kind of traditional, highly regulated thing that you're completely, revamping.
Yeah, it was really hard. It's still hard. It's definitely gotten a lot easier, but for the first year of MicroAcquire is venture backed now. We've raised about $11 million, and our first financing was in May of last year, or June. So let's call it less than a year ago. But so for the first 14 or 16 months, I ran MicroAcquire entirely by myself, entirely for free. I did all customer support. I did all customer calls. I did all product management. I did all marketing. I did a bunch of podcasts. I just I just needed MicroAcquire to exist. I was like, these founders are getting ripped off by these people. And I just, again, being like a startup enthusiast, I was like, I gotta fight to will this into existence. So yeah, it was super difficult. And then I've had, business brokers say like, oh, we've seen these marketplaces, they don't work. And then it's like, okay, well, we've closed $250 million in acquisitions at this point. Do you want to maybe readjust that saying? Mm-hmm. And that was motivation for me. Having doubters like this will never work. I can't even tell you how many people told me. I had a friend who's an investment banker that lightly helped me with selling business apps, which is, just for free, just basically hey, is this normal? Kind of phone a friend thing. Mm-hmm. And he was like, your biggest competitor is basically PE firms cold emailing startups. And then he counted me out. And then even my prior mentor and investor, he was scared. He was like, I don't know, man, this is gonna be hard to make work, put this on a marketplace, mm-hmm. multi-million-dollar businesses. So there was, so what I had to do is again go towards just really shining light on this market that no one really just kind of pointed it out hey, I think startups are being sold at prices that are lower than what they're really worth, because brokers are, purposely pushing down the price for their benefit rather than the seller's benefit. The founder is not in control. This market is favored by buyers, not sellers. And that's just not how it should be. Mm-hmm. So I just kind of said as an entrepreneur, hey, this needs to change. There mm-hmm. needs to be other options. and not to say like every single broker is bad and they're evil. I'm just saying, the more options that startups have for the most important part of their journey as a founder being the exit, the better. So that's all I was trying to achieve. And but yeah, I mean, it was incredibly difficult.
Do you have some successful outcomes that you can share as examples?
There's been a lot. Like off the top of my head,
your favorite maybe?
I always forget the company names, but I can tell you my favorite story. There was a startup that sold for about $250,000, and it was a 23-year-old in India, and that amount of money in India is a lot. And he wrote just like the nicest email to me, just saying like, basically like my life has forever changed. Like I'm paying off debt.
Amazing.
And we've had some other stories where.
So you're international too. I missed that.
Yeah, I always joke, we've had acquisitions on every continent, except for Antarctica. I'm still working on that one. Another one I really enjoyed.
Penguins are us. We'll keep a lookout for Antarctica companies so you can complete the set.
Yeah, I'd say the first big deal that we did that was kind of like whoa, this actually works. Like the first like 7-figure deal was a company called Push Engage, and that was acquired by an individual named Syed Balkai, and he runs WP Beginner, and he has a portfolio of just WordPress applications, and it was a multi-million-dollar deal on the platform, and it worked out really well for both parties. And that was a moment where I was like, wow, okay, so even buyers want this. Like buyers, want to, have another route to finding companies to acquire. So let's just get everybody in one place, and let's, set some standardization in terms of how this process is going to work. Mm-hmm. And that's kind of the theme at MicroACQUIRE, is where, we want to kind of recreate the market for, these lower market acquisitions, rather than just kind of, taking market share from brokers. We want to rethink it. And also work with the brokers and kind of, weed out the bad ones, and then, have a system where founders, when they do work with brokers, they have a list of entrepreneurs that can vouch for them.
Mm-hmm. Super cool. I know we're getting close on time. You've been very generous to spend an hour with us now. So I want to wrap it up.
My pleasure.
Yeah, it's been super fun, but wrap it up with the question.
It's my birthday, by the way.
No, it's not.
Jonny did that to me when we did our
yeah, but it actually was my birthday, so
yeah, you can't joke about that. That's
no, my birthday's October 1st.
Okay. Well, given that it's a normal Thursday, we'll keep you for one more question. Which is we ask this to every founder at the end, which is, what is your best piece of advice that you'd give a founder who's just starting out?
I would say, understand the outcome that you want. What I mean by that is, I think a lot of founders today, they read about, startups raising large amounts of funding, getting into Y Combinator, moving to Miami, whatever's cool. And that influences their decisions in terms of how they build their company. If you want to build a multi-billion-dollar company, great path, go do it, but I think a lot of entrepreneurs are perfectly fine with a business that, aligns with their passion, makes them happy, pays their bills. And those businesses can, scale and then be sold for $1, $2, $3, $4, $5 million, which
on MicroACQUIRE. I got you, bro. I got you.
I see it every day. I see it every day. I'm
after they raise on WeFunder first.
Nice. Yeah, look at that.
There we go. But my point being is, I think, before you start a company, think about the outcome that you want. Is it just to make your family financially secure? Is it to disrupt the market completely? Is it to just have a lifestyle business where you're fully in control of your time. And I think, really defining that is crucial because, especially in today's, financing market, it can be really easy to just create a job you hate. And that's where, I see a lot of founders going down, and it kind of sucks to see because, again, as a startup, you can create whatever you want. You can create whatever you want. You can work with whoever you want. You can do whatever you want.
But be deliberate about it.
Yeah. So just really think about, what you want out of a startup, and then build every action that you take, have it around that outcome.
Love it. That's great advice. Thank you. I feel like this whole podcast has been filled with your.
It's been awesome. Advice. This has been really fun. Favorite episode, Cabal? Could be. I mean, all of our episodes are our favorite episodes. We don't have favorite children here, but this is also the favorite child.
I appreciate you both.
Thank you for tuning into another episode of Adventure Capital. I hope you laughed, took notes, shed a tear, and most importantly, feel ready to go off on your own adventure. And remember, whenever you're ready, We Funders here to help. Be sure to like and leave a review, gang.